2003. I'll give you a bit of history and how we've seen the migration of environment and social sustainable investing. In Aloe, we tend, and we never have used the term Cleantech. And I think environmental and social sustainable investing actually fits it far better. Why? Well, actually, you really need to take into account the social sustainability side and your effect on the environment around you and the people around you when you make an environmental investment. And for me, that's quite a key thing. So it's not just about making returns from a booming sector where people have put up a bubble and called it clean tech. It really is looking at the end-to-end effect of that technology, both on the environment, but more importantly, actually on the people around that. And I can give you many, many examples of that. If you go and you produce or you do a run-of-the-river hydro, there are the right way and the wrong way of doing it. There is a way of affecting the people in the communities in a positive aspect, and there are the ways of damaging severely both the environment, the fisheries, the food chain in the area, etc. And you have to take those things in consideration. People consider biomass to be environmentally friendly. Well, actually, it is and it isn't. You can sit there and you can negotiate on both sides of that equation because you are taking, at the end of the day, the food and the waste and the agricultural waste, and you're putting it, burning it up and getting fly ash, and that is not being tilled back into the land. So actually, you have to consider the two. So that's why we really look at the environment and social sustainable angle, and that's very much an Aloe way of doing it. In terms of the history, actually, we started in 2003, and I've still got our first fundraising presentations from 2003. We initially talked in 2003 and went to a lot of investors in Europe and talked about investing in environment in China and India and Asia. Actually, my mom's Chinese, my dad's Indian, and I was born in Africa, so it was quite a good mix at the time. And that was about our only sales pitch. When you talked about environment in Asia and in India and China, people just laughed at you. They thought you were mad. Their whole point was, they don't care about this. They want to grow their industries. They're not interested. Actually, so we proved them wrong. And so what we started off doing back in 2003 was the following. There were a lot of very good, strong technologies in Europe that had been developed in primarily Scandinavian countries, Germany, etc., where they had used these technologies in the environment sector, but the market there had disappeared, primarily because either the products had been totally used or it had moved on. A good example would be the first company we acquired was a company that did NOx catalyst treatment for coal-fired power plants. Now in Europe, this used to be a big thing in the 1960s and 70s. All coal-fired power plants used it. In China, nobody was using it. In India, very, very few people are using it. Well, we went to the German company and we actually acquired the entire technology and all the assets for $1. We formed a joint venture with Dongfang Boilers in China, which is the largest boiler and coal-fired power plant boiler manufacturer in China. They actually acquired the technology from us. We formed a 30-70 joint venture, and we deployed that very successfully in China. Today, that's producing approximately 15,000 megawatts of NOx catalysts for all the power plants in China. We've done the same thing here in India. We also bought coal gasification technology, which nobody believed in 2003 would take off. We bought that from the British gas Lurgi. The Lurgi group were in trouble in Germany. We bought that again for $1. We signed a joint venture with Shriram in Chennai, and we're deploying 4 coal gasification plants here in India to produce very good, high-quality fertilizer and chemicals, and we're doing another 5 plants in China. So initially, we started up in 2003 buying all these technologies and transferring it here. And that has been the foundation of what Aloe Private Equity has been since the beginning. The goal and the model for us has been to transfer technology back into Asia, own the technology here, and essentially grow 6 or 7 $1 billion businesses here. That's what we want to do. You hear a lot of times this frustration about technology transfer. Actually, that never occurs, or rarely does that occur. You almost inevitably only get technology licensing. And technology transfer is a whole new area which you really have to focus on. It requires extreme dedication. It's not about investing your dollar. It's about teaching the partner, working with the partner, going through the ups and downs, and eventually giving that partner full ownership back of the business, which again is counterintuitive to the private equity way of working, which is put your money, exit, dilute the shareholder down, dilute the founder down to 6% or 7%. And actually, that's very much against the Aloe philosophy and the way we work. And the reason for that is actually myself, I'm an entrepreneur. I built 7 of my own companies and sold it. And part of the frustration was my successful companies, I'd inevitably have 5 or 6% of the business. And my unsuccessful companies, I would own 80% of all the debts and the headache. And actually, at the end of 7 years or 10 years of doing this, I was more bankrupt for my unsuccessful companies than my successful ones. I thought I'd get into private equity and try and do it differently. So that's what we're trying to do. So, classic examples of what we can discuss there that we've done. Shivani mentioned Greenco, which a lot of people here would know. Greenco Group actually was founded, the concept of Greenco Group started off in 2003. We were having a discussion and a brainstorming session with the Aloe team members on what would happen if carbon emission credits really took off. Believe it or not, in 2003, carbon emission credits was just a word. Very few people understood what it really meant and its implications. And so we're trying to figure out, if carbon emission credits take off, what effect would that have on businesses? Where could you utilize carbon emission credits to make unprofitable assets profitable? And if carbon emission credits don't take off, how do we make sure we don't lose our money? And at least we get back 80%. And we looked at a raft of different technologies. The key area we then focused on was renewable energy in India. And this is a fundamental difference which most Europeans do not understand until more recently. When you talked about renewable energy in Europe, it was all about subsidies. They did not understand that in India, renewable energy without subsidies made a heck of a lot of sense. So once you started coming into India in 2003 and 4, and you did not have this understanding of carbon emission credits here, most entrepreneurs here deployed biomass plants to get the capital tax breaks. We found this a tremendous opportunity and a win-win situation where we went to all the small promoters of biomass plants, and we offered to acquire their biomass plants at 2 or 3 times positive cash forward advanced, knowing full well also that we could get the carbon emission credits, and in some cases backdated. Now, this is where the technology transfer really works with the entrepreneurs. When we came into Greenco, originally we owned 92% of the company. We brought in Mahesh and Nil as the promoters and founders of this business. Today, I'm very pleased to say Mahesh and Nil own 30% of this company. And in fact, over the next 2 to 3 years, the goal is to make sure that they own 50 to 51% of this company by transferring our shares gradually back to them as we continue to make our returns. They will then own today one of the largest pure-play renewable energy companies in India. How did we do that? Well, we started off by buying biomass companies, optimizing the efficiency of those plants, bringing in new technologies from Germany to improve the efficiency of the burners by 2 to 3%, doing things like bringing in technology of environment where you would actually start putting in filtration systems and NOx catalyst systems within the power plants. And actually, that was not done here in India at the time. So if you went to the average biomass plant, within about a 5 to 10 acre radius around the biomass plants, all the agricultural was black with soot and dust. And the consequence of that actually, and this is why I say you have to look at the social sustainable side, because at the time we forced the issue of putting in filters and NOx catalysts, there was tremendous pushback against us to do that. However, what they later understood as within a year of seeing reduced profit at the plants, actually our longer-term profits went up tremendously because of the amount of support that we got from the farmers in the area. And in fact, we got tremendous support from the farmers such that when competitors tried to get into the sector to actually build biomass plants, the farmers did not supply them with the feedstock. This word spread around, and in fact, we would actually get approached by farmers supplying biomass plants in other regions coming to us saying, we want to support you to come and buy this biomass plant in our region because they're affecting our kids, our family, our land, and our area. And it had a multitude effect, but it took 4 to 5 years to get there. Okay? So I must encourage you, if you get into clean tech, get into it for the right reasons. It is a long process. It means putting your passion, not just your money, building this thing for 6, 7 years as a partner, and you will see phenomenal returns. On Greenco, I'm pleased to say we're seeing approximately 16x return on our original investment. You know, Mahesh and Anil have been the most wonderful founders to work with, extremely honest, extremely transparent, and a really great relationship even today. So that's the story on Greenco a little bit for you, and they continue to do well. We've listed them on the London stock market, and I'm sure quite a lot you know. The next story is, you know, where does Cleantech go? So we invested a lot in energy in 2003, 4, 5, 6, and 7. Actually, by 2007, we felt the space got extremely heated, and very much what Shivani said, if you talked about clean tech in India or clean in India, it actually wasn't clean tech or clean. It was just energy. There was nothing else but energy, okay? And that was all it was. And it was, and the number of business plans that you got was just hilarious, to be honest with you. Having started up Greenco, the number of people coming to you with a 2 megawatt biomass plant here and a 30 megawatt there and a 1 kilowatt here, and it's just, it was nuts. Everybody was on the bandwagon. So we moved out. We started really focusing on recycling. And in 2007, 8, 9, and 10, we have been buying up assets globally on technology leaders for recycling. Now, in Aloe, recycling is different to waste management. For us, recycling means taking a waste product and creating a high-value end product again. So, for example, if you take today, people claim they recycle bottles. That's the claim, and they're right. They do recycle bottles, but it's not really recycling. It's more what I call downcycling. In other words, they take the waste plastic and they produce another byproduct, and that byproduct that's created goes into your suiting jackets, goes into your stuffings of your chairs. It goes into anything that you can't see. Okay? It goes into places where you're getting a low value. That's not what we want to do. We invest in technology which gives you the same grade as the initial virgin product. So we have technologies in our portfolio that do the #1 lithium-ion battery recycling in the whole world. We bought that company in 2006. Now it's doing extremely well. We held it for almost 3, 4 years, doing lithium-ion battery recycling in Singapore and with Dell and HP and all these companies. And now, suddenly, miraculously in 2010, the company's taken a huge growth as you have lithium-ion batteries for all the car and vehicles. And suddenly we've signed a deal with, in Japan, we've signed a deal with A123 batteries in the US, and all of a sudden, after 4 years, this thing has taken off. We have technology doing fly ash dust recycling for steel. So with ArcelorMittal, et cetera, and the steel factories where you have 6% of waste, we're able to recover all the chemicals that go into that and recover all the steel dust that otherwise is toxic when you dump it. We have technology doing HIPS, ABS, PP, plastic recycling. We have technology, anyway, lots of different technologies. This is a key area which I see going on for the next 10 or 15 years. India is very, very behind on this. We do see a lot of Indian companies now coming up and getting interested to do electronic waste recycling. We own the largest electronic waste recycle in the whole of Europe. We do approximately 2,500 fridges every single day, 350 TVs every day, 4,000 washing machines every day. It's the largest electronic waste recycler. And from that perspective, we've come up with a term which we call mines above ground. Instead of going into the ground and digging out copper from the, instead of taking 6.5 tons of soil, processing the soil to get 1.5 tons of copper, these are your mines above ground. This is the stuff that you can process and get equally good copper, equally good aluminum, steel, plastic, HIPS, all the metals that you ever need. So this is what we're very focused on. I think, have I taken up all my time or what? I think I have. So I'll stop there. Happy to meet and talk about other things later.